everyone, Moonlight here. It's our absolute pleasure to have Patrick here today with us. Hello, Patrick. Would you mind giving us a brief introduction of yourself?
Yeah, sure. My name is Patrick McCorry. My pseudonym on the internet is Stone Cold Pat. That's what I used when I first joined the Bitcoin community back in 2013. I sort of discovered cryptocurrencies because I wanted to do, I did cryptography at university. It's the most difficult course. So then I thought, I'll go and do a PhD in cryptocurrencies. So then I did a PhD from 2013 to 2016. I was a postdoc for a few years at UCL. I became a lecturer at some point in 2018, 2019. I tried to do a startup in cryptocurrencies. It was acquired after 9 months by a company called Infura. And now I work at Infura as a senior system engineer, and I'm probably the worst engineer possible, but that's me now.
Impressive. Patrick is the first PhD graduate in the UK for cryptocurrency. So how did you start your journey with cryptocurrencies?
So I was an undergrad at Newcastle University. There was this new course about cryptography. As everyone's aware, cryptography is quite a notoriously difficult topic. It was the most exciting one at university anyway. And then I thought, I could try to do a PhD in this, is either go get a real job or stay a student for another 4 years. I met my soon-to-be advisor called Feng Hao. He basically told me he found this thing in the dark. He introduced Bitcoin as, he was like, Patrick, there's this, currency on the internet called Bitcoin. It's being used in the dark web to buy drugs. Do you want to go check it out? I went home. I started Googling about it. I went on, I don't even know CoinDesk was around back then. That's like 2013. But anyway, I fell down the rabbit hole. Then I started doing my PhD in it, and it was really exciting. And when I first started, that was the first bubble. When I say first bubble, there's so many bubbles. But it was like 2013 when the price went from $100 to $1,300. And I was like a student just sitting there trying to get free Bitcoin off these websites. Then all the websites started shutting down.
So you were basically the witness of this like drastic change in the industry.
I feel like that, yeah. I feel like over the years, it's like the industry now is very, very different to 2013.
Yeah,
Ethereum didn't even exist. That's probably a good example. Litecoin was around. I don't even know if Dogecoin was invented yet. I forgot. I think that's 2015, but I don't really remember.
Yeah, like I mentioned, you are the first PhD graduate in cryptocurrency, crypto industry. And loads of your work has been like featured on different like academic magazines and stuff. So would you define yourself as more of a scholar or like developer, trader?
I mean, I definitely started off as a scholar. So I think when I started in 2013, there was me and my advisor in Newcastle. UCL only started getting a group around 2014, 2015, but there was probably about 10 academic papers. Some of them by a guy called Andrew Miller, Elaine. So it was a very early days. There was so much low-hanging fruit, which is amazing for a PhD student. But nowadays, I'm still very much an academic, I think. But because now I'm more involved with trying to deploy systems, I think what I'm just really good at is explaining how systems work. But I'm not very good at building systems, as in programming.
Don't be too humble. But
You say that, but you talk to my co-founder, Chris, and he would definitely confirm that.
I feel like your role in the team is probably more like, that guy who's always like assistanting because you were the lecturer at King's College, right? How did that go? Like, what made you? Well,
for King's College, so I was a postdoc at UCL. And then, the natural progression is you become a lecturer and this is like the career path. And I sort of applied for King's off the off chance that I might get it. I didn't think I was going to get the job there. I just applied because it was fun. Just to see, what do I need to do in order to get this type of job? Then when I went to King's, they were very good to me. I had a lot of free time in my first year. I was only there for 9 months. What can I say? I left. I mean, there's a reason why I left, but that's not because of King's. But while I was at King's anyway, I taught an MSc in cryptocurrencies. That was great fun. We ran it during the day for the MSc students, and then at night we had I put together this course for London.
Mm-hmm.
We thought like 30 people would show up, and then over 300 showed up. It was insane. People didn't actually fit in the room. They were standing in the back. We had to upgrade the room to be a bit bigger. But in that sense, it was really fun though, because it was just a great venue for teaching people about cryptocurrencies. And that was during the bear market. That's like 2018, 2019, just after the fall of ICOs. And that crazy era.
Yeah, that moment must have been so rewarding. Have you ever thought about yourself, like, regarded yourself as someone that could, taking the role as a teacher, or like someone, a mentor, like someone that's guiding other people? Because maybe back 10 years ago, like you were also amateur, you had no clue what would go down. You probably would, you hadn't heard anything about this industry maybe when you were that age. So how did that, was it like really rewarding, or was it more like?
I loved it. I loved teaching. What I used to do, so when I came to London, I guess teaching really only happened in London. I didn't do that much in Newcastle. We used to teach the cryptocurrency course for the MSCs. We did the evening course. And then I was involved with this company called Work on Blockchain by Antonio. And he used to run these monthly boot camps, so weekend developer boot camps, where we'd have 30 to 40 people come and we'd just teach them about, cryptocurrencies, so Bitcoin, Ethereum, how do you write smart contracts, how do you break smart contracts. And we'd all go to the pub afterwards and have a nice beer. And they were all free, so we never charged for that. At least when I joined anyway, we removed, because basically when I joined that workshop, it was a paid for event, but it was 90% meal or like 99% meal. So we made it free for, broke and then men started complaining about that. And then we thought, well, why don't we just offer it all for free?
Are you still running it?
Well, COVID happened. It broke my heart a little bit. So I'm hoping we'll start it again. It was really fun.
I would definitely join. But like loads of countries have put in like restrictions on using cryptocurrencies to trade. How has that affected your business or like your career in general?
Our career, our software got acquired before it was used by anyone. So I'm trying to think. So I guess for me, I'm on the scale where I think everyone's extremely adversarial. So I don't really use centralized exchanges like Coinbase or Kraken. I don't really trust them. And that's only because historically over the past 7 years, exchanges get hacked all the time. Like I think the last one I can think of was Binance. They lost 7,000 Bitcoin. I mean, they have enough money to cover the cost. So there's just risk. So I normally just use DeFi. So I just go in Uniswap and I perform swaps there. And what's really nice about using something like Uniswap is that even if the regulators come after it, it's a protocol that runs on a network, and the website is run locally. So it's not like you can shut down a website and stop access to it. So for me anyway, there's not been that much of a regulatory issue that stops me from trading. And I guess the UK is quite flexible anyway. I guess it's mostly like China has been very difficult for some people.
Yeah, there was a new policy last year which was announced, just like the one that was announced in 2017. Yeah. And also you did mention that a few years back it was the bear market, but now it's a bull market. It's a year of it's a bull year. So how has that also, like, any insight or any prediction of what would go down at the end of this
year? In
China? Or like maybe in the global market in general? Like,
I mean, I think maybe one thing to highlight, at least about, people always call it the China flood because it happens every few years. But this time it was a bit more serious because they actually did kick the miners out from using the fossil fuels. But I think what really is important to highlight about an event like that is cryptocurrencies are built to be extremely resilient. So as long as there's one person out there willing to mine Bitcoin, and in this case Ethereum still, as long as there's one individual or a small majority doing it, the network will continue to progress. So as we've seen, all the miners get kicked out of China, they're sort of scrambling to find somewhere else to go. But the network keeps going. It slows down a little bit, but it's extremely resilient to nation states, which is why it's just an exciting thing to work on.
Interesting. I think the nature of being unpredictable and so like volatile is actually so intriguing when it comes to cryptocurrency. Yeah. And also you do cover lots of like areas like rollups, arbitrage, and decentralized system. Is there like a topic of your own preference? Is there a...
Yeah, I mean, I can give some context there. So what I'm mostly interested in is like blockchain scalability. So as we're aware, cryptocurrencies don't scale. Bitcoin does on the magnitude of like 8 transactions per second. Ethereum does like 17 transactions per second, but really it's not a big difference, 7 or 17, it's the same magnitude. But the question is, why don't they scale? Why don't these cryptocurrencies scale? And it's mostly for decentralization. The idea is that with these cryptocurrencies, we want to build the system such that a certain percentage of the world's population can verify the network, can check its integrity, and keep up with transactions in blocks in this case in real time. So as long as I can, run, like, this is the Bitcoin philosophy, if I can run Bitcoin on my Raspberry Pi or my laptop, then I don't have to trust anyone to tell me the truth about the network. I run the software, I create the database myself, I can check my own balance, I can check all the incoming transactions, and I can verify that everything's correct. And that's decentralization of, who can, hold the network accountable, who can verify that it's correct and it's not being tampered with. And that's actually what hampers the scalability of these networks. So the question is, given this limitation that, we want to increase the throughput up to 100 transactions per second, but we don't want to reduce the quantity, the percentage of people who can validate the network in real time. So that's sort of the challenge with scalability. And it's a very noble challenge because it's a very difficult problem. So what I'm interested in are protocols that are known as off-chain protocols. And the idea is that you can take the assets from one network, you can transfer it to another network, and you can just do the transactions there. But the idea is that you just still retain the same security as if you were transacting on the main network. So one example is I take my Bitcoin, I go to another network, I transact there, but I don't have to trust this network whatsoever. I should only have to trust Bitcoin. But I'm not transacting on Bitcoin, so everyone here doesn't have to deal with it. It's just whoever's on this other network. So a really good example of this is Coinbase. You go on Coinbase, you buy and sell, you swap, you get your coins, and then you withdraw your coins. But you have to fully trust Coinbase with all of your money. So could we have a Coinbase-like experience without having to, give them custody of our funds?
Interesting. So you don't actually rely on the platform or the system. You just trust on the sort of real-time transaction or
Yeah, I mean, another good way, I guess what you're relying on is my ideal world is I go on Coinbase, I lock my funds into the system. Coinbase is responsible for organizing and ordering the transaction. So if I want to swap, Bitcoin to ETH, Coinbase will order those transactions and, execute them, and I'll get, I'll do my swap. But the idea is that I never have to trust Coinbase with my money. If Coinbase goes offline, if they disappear, they try to freeze my funds, I can always withdraw my funds back to the blockchain. Yeah. And so that's the ultimate goal for blockchain scalability. So that's sort of the two visions there with the Lightning Network, and then you have these roll-ups, like Arbitrum, Optimism, Starkware, ZK Sync. And there are two different ways to scale the network.
Interesting. So has there been scalability problems, problems with the fact that they don't scale up, and also the fact that no one's holding, no one's being accountable for those cryptocurrencies? Has there been problems recently?
Yeah, I mean, there's always a problem of custody. So if you, today, most people just use custodial exchanges, and that is scaling the network. But the issue there is they get hacked, they lose their funds, and then you lose all your money. So Mt. Gox lost 650,000 Bitcoin back in 2014. Bitfinex lost 120,000 Bitcoin in 2016. We just seen another hack with that Poly network, which is basically just one guy and a dog on that network. They lost this, so the problem is there's ways to scale it, but you have to trust another party. But the problem is building these solutions where you can maintain custody of your funds while interacting with the services. The protocols were just in development for 5 years, and now is a huge engineering challenge to actually deploy them. So I feel they'll probably emerge over the next few years, and then everyone can start to realize, oh yeah, this is really cool. I don't actually have to trust Coinbase with my money anymore. And it's also good for Coinbase because, controls a liability. If they have control over your assets, they have to deal with regulation, AML, KYC. If they don't have control of your assets, then all they're doing is, organizing, ordering transactions. So it reduces their liability and the regulation they have to adhere to.
So there's also always a whole team working behind the scene trying to guarantee that all the processes are being regulated as.
It's a traditional company, yeah. So right now, if you're a company like Coinbase, you're heavily regulated. I know, so that's why everyone I don't know if you've used Coinbase before, but everyone complains about their customer support because they keep getting locked out. Yeah. If you were able to build these blockchain scalability solutions like the roll-ups, then you can get a Coinbase-like experience, but they can never take your money. If they try to freeze it, you just take it out. So it's really nice.
Because you mentioned that like Ethereum could make 75 transactions per second.
About 17 or something. Yeah. It's not a lot.
Why can't they make like 5,000? Is it
5,000? So it was just that, like, so it's just to keep the network decentralized.
okay?
Yeah. So if we had 7,000 transactions per second, then, you know, your little laptop, if you want to validate the network in real time and check that everything's correct and valid, you'd have to process 7,000 transactions per second and your laptop will die. My laptop will die too. But 17, you can, maybe, I don't know, with Ethereum, maybe Bitcoin, you could do Bitcoin there.
Would you trust like one day, because now AI technology is developing so fast. So would you trust an AI or like a robot to, you know, to do all of, I mean, technically laptops, computers, and all the monitors are also robots, but would you like one day?
That's basically machine learning, but the idea is, normally with machine learning, you have a problem set where there's no one correct solution. Mm-hmm. And so you're really just trying to find a solution out of this crazy mesh of data. With cryptocurrencies, because of cryptography, everything's deterministic, very clear cut, very easy to verify. Like, you don't need any AI. You just run the Bitcoin software. There's a set of consensus rules that everyone agrees to. You get the Bitcoin blockchain. You just check the rules, and you're like, oh yeah, this is perfect. This is correct. This is it's very, very like straightforward in that sense. I mean, for the software, obviously you're not going to do a pen and paper because that's too hard.
So would you say like everyone is eligible for like the entry level? Like, would you have to be like quite pro at like engineering or like computer science, something to do with technology, to be able to join, to be able to trade? Or
like to use cryptocurrencies? I mean, ideally, you shouldn't know anything about how the network works. It's a bit like using the internet. You know, you don't care how TCP/IP works or how the browser works. You just go on, go on Instagram, and then everything just works for you. You know, that's how you
scroll, and then
you just scroll,
you find everything,
and then you do this, and it refreshes everything, and then you just start scrolling again. You know, ideally with cryptocurrencies, people should not have to worry. All they should be aware of is you download a wallet, you have your coins in your wallet, no, not your keys, not your coins. And from then on, you just know that as long as I have this wallet, it's my coins and not, you know, someone else doesn't have it. And then from there, you can start interacting with all these really cool dApps, or, you know, just transfer money to people if you want to do that as well. So really, most people shouldn't be aware of any of these underlying technologies.
Yeah. Or even is rollups though? Like, how do you define it?
Rollups. So rollups are basically just another blockchain network. So if you consider, you have Bitcoin, you have Ethereum, you even have Polygon nowadays, which is quite popular. You have Tezos. They're all just different blockchain networks. You know, they all have their own validators. They all have their own, you know, transacting environment. They're all their own smart contracts. And a rollup is just another blockchain network. It's just the difference is that when you use a rollup, so if I'm on Ethereum and I lock my funds into the rollup and I start, you know, transacting on the rollup, I only have to trust Ethereum and my money, and I don't have to trust the other network. So it's a very simple, like, it's really simple ideas. You know, there's a blockchain network. I put money on it, but I don't trust the network. I just trust Ethereum. And that's why rollups are exciting. It makes it sound really nerdy, but
it's like you make the commitment, but you also don't really want to pay for the consequence, kind of. Yeah.
You want to retain that, you know, that decentralized security that you're getting. You know, that, you know, your money is safe because it's on one of these highly valuable networks. Mm-hmm. But maybe there's a horse racing game you want to play, and it's on another network. And that network is a bit dodgy. You know, for me, maybe I can't read the language of the website. So all I want to do is I want to deposit funds and I want to play the game. Mm-hmm. And the idea is that they can't, you know, steal my money because I put funds on the system. Maybe they'll cheat me in the game. You know, it's horse racing, is always rigged. But, you know, they'll cheat me in the game and not because of the underlying platform. And so that's why it'll be really fun. So I can go on any website and you know, that exists. I deposit my funds. I can start interacting with them, but I never have to trust in my money. And so it makes it really permissionless. You know, you can actually interact with any service, and, you know, they're just not going to run away with your money.
Well, I'd say like this topic of cryptocurrency, Bitcoin, Ethereum is still really fresh and new. Mm-hmm. Not many people have, you know, heard or like learned much about it. But would you reckon something could be, you know, like potentially happening?
Well, to grab their interest, or yeah. I mean, I think there's two sides to this. I think for Bitcoin really resonates with people who it's really about the asset. It's these the sound money where you hold this asset, and over time, the value just keep going up because it's deflationary. A lot of people, have their, they have savings, they put in a bank account, the interest is terrible. They're getting like 0.5%. They stick it in the stock market, but then we all know the stock market's a bit rigged. And then there's inflation. Your savings are devalued by 2% every year. Right now, inflation's 5%. So every year, your savings are devalued by 5%. And so people are just a bit sick of the system. They're sick of these national currencies that keep devaluing their value. Yeah. So now they're thinking, well, why don't I just buy Bitcoin? Clearly, there's only 21 million coins. It's a brilliant meme, but it is, true. And if you hold it there, then over the long term, it should keep its value. And so a lot of little people, like, I don't know, Joe Blogs is typically the phrase. They're starting to understand that, and they'll just buy Bitcoin, a little bit of Bitcoin to test it out. Then you have these institutions like, Tesla is the brilliant example. They bought 1.5 billion Bitcoin. And then there's Michael Saylor from MicroStrategy. He's nuts. He's bought like $3 billion worth of Bitcoin or something. He's heavily leveraged. So that's like the Bitcoin side. People for Bitcoin just consider the asset, sound money, protect my savings, and allow me to transfer with anyone in the world. Ethereum, it's a bit more, I think it's more culture. That's how people describe it now. It's capturing culture. This is JPEG summer and everyone's buying JPEGs. So I just, on the way here, I seen on the internet that someone bought an ape for $1.2 million, a gold ape that has laser eyes. Wow. But that's, no, exactly. Wow. Then you have an ETH rock that sold for $100,000. But it sounds ridiculous, but it's really a platform that just allows for wide speculation on any type of asset. And it's, it's capturing culture because you have all these celebrities that are endorsing these JPEGs, which is, people will agree or disagree with that, but I think it's a different community.
Yeah, you mentioned about Tesla because Elon Musk has mentioned about like people would be able to buy Bitcoin, to make payment. So some people have, some comments on that saying that he doesn't know much about cryptocurrency. He doesn't know much about the market. So, how dare is he to say, how dare him saying. So
I think the issue is that everyone's just really annoyed that he crashed the market. Mm-hmm. So, Elon Musk is a bit of a troll. He obviously bought a lot of Bitcoin. He hodled it. And then on Twitter, he was trolling all the Bitcoiners that he would dump it and that people would be really upset. They had this like, meme. There's a very typical meme where it's like you're on a bed and your girlfriend's looking at you, you're crying, but then the next picture is you're crying because of the chart and not the girl. So, he put that on the internet and obviously everyone's just really pissed off at him because he crashed everything for 3-4 months. But I think on the other side of that, the whole point of Bitcoin is that we shouldn't have celebrities like that who we rely on for value.
Yeah.
Really it's good that he bought it, but it shouldn't be a defining factor of Bitcoin that he's bought it.
True.
But yeah, he also probably doesn't know that much about it because he's building a rocket. I don't think he has much time to go look at cryptocurrencies.
No, he's aiming to the Mars, so he probably doesn't have time for that anymore. But like obviously Bitcoin, like also the value of cryptocurrency it's not really dependent on like politics, society, or how the world is spinning around us for like everything. But it's quite interesting that how big celebrities, like big figures, when they got, invested into Bitcoin, the market would, like you said, would either crash or would either, drastic change and stuff. It's quite interesting how like human factor could actually change the market over just a second or like overnight.
I think what's also interesting, and this is just from a financial system perspective, we consider the Black Thursday crash of 2020, I think it was March, the stock market just crashed, crypto crashed, everything was on fire. But in the financial system of the stock market, they have these, what's the right phrase? I forget the phrase now, but basically if the market's crashing so fast within a short period of time, they have a circuit breaker. That's the phrase. They circuit break. You wait 15 minutes and then you restart trading. And on that day, the financial system was circuit breaking, then everything just got turned off. basically.
Wow.
But in crypto, we don't have that. I mean, we have BitMEX crash, and that was probably our circuit breaker. But the cryptocurrencies, like financial markets 24/7, is global, and it's been going for like 7 years. Technically speaking, the crypto market has now been running longer than NASDAQ in New York, because that's only 9 to 5, Monday to Friday. Where now this is like 24/7. So just in terms of time, it's now being traded longer than all stocks that are on that exchange. And it's, the longer we have this financial system with no circuit breakers, like we've just seen over the past 4 months, the nominal value of cryptocurrencies decreased by 60%. We lost $1 trillion in market cap. This just kept running. Nothing was impacted. None of the Bitcoin wasn't impacted. Ethereum wasn't impacted. The wider exchanges, maybe they probably made a lot of money from that, but they weren't impacted either. They sort of stayed alive. That just shows you how resilient the market is now. And that's sort of what people are going to start buying into. Okay,
so how much do you reckon has been changing in the community compared to it was like 5 or 10 years back?
So I think, when I started in 2013, I joined the IRC channels. I went to Bitcoin Wizards. That was my favorite IRC channel. And at the time, everyone says pseudonymous. There's people called like Fluffy Pony. He's well known now, but he was just like a random dude on the internet. And like SIPA and the rest of them. And back then, the community wasn't toxic. Bitcoin always has this bad label that is toxic because people argue on Twitter. But back then, there was no toxicity. People were just discussing about how do you make Bitcoin better. But I feel like on hindsight, there were two sides of the community. One side was about the asset. No inflation, protect the asset, be extremely conservative, sound money. Then the other side of the community, I guess they sort of get into it because they seen Bitcoin as a way to do payments, a payment mechanism. It wasn't really about the asset. It was about the functionality and what you could build with it. And over the years, you have the block size wars from 2015 to 2017. And I sort of feel like that's when the two communities really clashed. Mm-hmm. The payment people were saying, well, we need to increase the block size because we need more transactions. We need to keep the transactions cheap and make it available for anyone in the world, to spend Bitcoin. And then on the asset side, they're saying, well, if you increase the block size, then you're going to make it harder for people to be self-sovereign, check the network, and, it'll degrade the asset over time. And so obviously in 2017, it finally resolved the clash. You had Bitcoin, then you have Bitcoin Cash and Bitcoin SV and all these, shit Bitcoins. And then obviously today, Bitcoin's still very much about the asset, sound money. That's the whole narrative. But I think what's important is like that community, the payment community who looked at functionality, and they're all a bit, crazy. They never went away. But the thing is, Bitcoin Cash didn't work, Bitcoin SV didn't work. So where did they end up? Where did they go? So in the background, you sort of just had Ethereum ticking away. They're all about all these unicorn people. They're just all very adorable, and sort of they had the DAO. That got hacked. They had they were getting spammed because they mispriced all the opcodes on the network. But you know what? They were experimenting. They launched this network. They launched all these experiments. They had all these crazy visions for decentralized communities you could build, and those payment community sort of just went there. Mm-hmm. And so they've sort of joined the Ethereum bandwagon around 2016, 2017. And now what you have is like two communities that at one point were probably united, but now they're separate, going their separate ways. What's really nice about this is that if you believe Bitcoin should be about the asset, then you can just buy Bitcoin and you're settled. If you want to, gamble and speculate on all these crazy experiments like JPEG Summer and DeFi Summer, and the ICO era, then you can just buy ETH and you can participate in that network as well. So actually everyone's a winner, even though they're always still clashing heads because historically there's just one wants the other.
Yeah, they're like rivals, but they also do coexist. And they offer us two perspectives that people, have the right to choose which path they would want to go down to. And I think that's rather good. So people have options rather than, you have to go down this path to choose what you want to do. So I think it's actually quite good in that sense. So do you think that new types of cryptocurrencies would get produced every now and then? Or would they be more sort of stabilized, like more settled on this basis?
So I guess there's two parts to this. So there's obviously like new assets and there's just new blockchain networks. As we sort of seen over 2017, you had a huge range of new networks emerge. You had Cosmos, Polkadot, Tezos, Hex. I don't know if they have a blockchain, but they're always on the London buses. But generally speaking, you have all these different blockchain networks evolving. But the problem is that it's not really about the network, it's about the community. And clearly Bitcoin has a huge community, Ethereum has a huge community, but the other networks just struggle to get this community and get this, the bootstrap it and sort of get really cool new innovations on their network. And that's because in my view, there was just the two communities and they've not really fragmented as much. So they've all sort of, this huge network effect over the two networks that they like. But I think long term, as I mentioned with the rollups, you'll be able to create a new network, but what you're really doing is extending the utility of the network that you care about. So if I'm on Ethereum and I go on your horse racing rollup, then I lock my funds in there, but I'm still treating the assets that I have on Ethereum. So you're, scaling Ethereum and you're extending its utility. So now I have an incentive to go use your network because it makes Ethereum more useful. And so I sort of feel like when we look at this multi-chain world, you'll have this, base set of assets that will just be pegged on the different networks. So I don't really see a world where you have different blockchains with their own assets because it just doesn't become very composable. You sort of just lose value by issuing, like if you issue a token on, I don't know, I'm going to make up a name, let's just say bouncy chain, because I don't want to insult any project. You're just isolated from the world. You're going to issue it on Ethereum because all the other assets are there and you can just benefit from the ecosystem.
Yeah, so it's pretty much like every asset like interact with one another and they develop more functions and they could, gain more like, not like self-awareness, but like brand identity, more like, and then like differentiate from other assets. And then like people who ever want to rely on this would, pick certain assets.
And you like that branding thing, just to pick up on that, I think that's important because on the Bitcoin and Ethereum side, you sort of have, on Bitcoin, you have the Liquid network, you have Lightning, although Lightning is very exciting. Like I love Lightning. Then you have RSK. But the whole point is they always associate with Bitcoin. They sort of say Bitcoin is the base layer and we're transferring the asset from Bitcoin onto this network. Where in Ethereum, you have like Polygon, you're going to have Optimism, Arbitrum, and all those networks. And they're pegging to the Ethereum brand. And I'm putting my Ethereum asset on that network. So it's actually quite cool to see these new networks have picked up on the branding. And they just pick a network and they just stick to it. They don't go Bitcoin and Ethereum, they just pick one of them because they tap into that community.
Do you have any opinion on like cryptocurrency, like games or like games that, associate with cryptocurrency?
Yeah. So, there are games on it. So historically speaking, people thought, we could play chess. We could play Battleship, but those games don't really make that much sense for cryptocurrencies. Historically, the games that are popular involve gambling. So the very first application of Bitcoin, or one of the first applications, is called Satoshi Dice. The idea was that I send you a transaction, you flip a coin. If I win, I get the coins. It's a really simple game.
Straightforward.
Very straightforward. It's just straight up gambling.
Yeah.
But it's fun because you could do it in a way where I didn't have to trust you to flip the coin. After the fact, I can see that you did everything correctly. And so that's fun. We minimize trust in I don't know what you call the person who organizes the game. I don't want to say broker, but you're the one who's flipping the coin. I don't have to trust you. I can always verify that you did everything correctly. And so what's cool is a fun game. I don't have to trust you. You flip the coin, I win, you lose, etc. And then on Ethereum, a lot of the games are sort of like, the really popular games are like Ponzi schemes. But the thing is, like a Ponzi scheme, the idea is I put money in, I put money in now, expecting someone to come along and to pay me out and give me more money. So the thing is, if you design a game that way, so in this, one of these smart contracts was called FOMO 3D. I buy like a token, I think, on the smart contract. That's worth $2. And then there's a big pot of money next to the token. Okay, so if no one buys my token in the next 30 minutes, then I get the big pot of money. And so you look at it and think, if I can buy the token from him and I pay an extra 10%, then I get I get all the money you had, but now you're in for the chance to win this big pot of money.
Everything builds up and everyone thinks about the same thing, and then that's how it works.
Yeah, so these games are extremely popular. This big pot of money grew in the millions of dollars because people were just, trying to buy the right to win that big pot of money. And then you have people writing bots for it because they were trying to win the big pot of money. Then eventually someone won because they spammed the network and they prevented anyone from buying in. But that was a fun game. But it's Ponzi in style. But the rules are known. Everyone's informed. This is how the game works. It is a literal Ponzi.
Yeah.
And but the question is it a Ponzi if you know the rules, or is it just a gambling game? So it's like, I don't know. But those games tend to be quite popular.
But how would you guarantee the players, whoever is involved, that everything's safe and...
Yeah, so this is what's really exciting for these networks is that this game is governed by a program on the network. So someone's created FOMO 3D, they deploy the code to the network, and there's no more human operators. Okay. If I wanted to participate, I just look at the code. I know that's exactly how the game's going to run. And so then I know the rules of the game. I just deposit my money, and then I just compete with everyone else. So, it's trust minimized gambling in this sense. I don't have to trust any human operator.
That's really fun. Have you ever thought about creating your own game or software?
I mean, at one point I considered making a FOMO 3D just because it's just a really fun idea. But the problem is in the UK, if you build a gambling game, you need to have a license for it. Okay. So a lot of people go to Dublin to do that. But anyway, I also don't want to release a Ponzi scheme under my name because maybe the FCA will come and just put me in jail. I don't know. Yeah. There's still regulation, and even though it's a fun idea, I know that these fun games can explode. And then people may lose money because of it because they're gambling. So I don't know.
Yeah, I think it could be a bit controversial when it comes to regulations between different countries, because I think Bitcoin and cryptocurrency in general could be such a global topic. But at the same time, I don't think it could be ever as universal as, people's music taste, because there is certain ban on this from certain parts of the world, certain regions. So people got different understanding towards it. People have different accesses towards it. So I think it could be an issue. What do you think? It is actually quite beneficial because people have different, insights and different comprehension towards
cryptocurrency. Yeah. I think, so this is always an issue is sort of you have the typical middle class Londoner who looks at cryptocurrencies and they think, oh, well, why would I buy Bitcoin? It doesn't benefit me. I live in London. Then the system works for me. And that's a very valid opinion for people to have. But something like Bitcoin, at least, is not designed for the typical middle class Londoner who doesn't have to worry about the financial system. It's built for people who get locked out of the financial system. So, if you're in Afghanistan right now, you have the Taliban coming down your street. Where do you keep your money? And it was very topical. Where do you keep your money? Well, I keep it in Bitcoin because, I don't trust the banking system here. In Lebanon, crazy inflation last year. I think it was I forget now, it's 130% or something crazy. Basically, your savings more than halved. And you think, well, do I keep my money in this currency or do I buy Bitcoin? Clearly, Bitcoin, if you're tech savvy, was a very good decision to make. And even as a startup, I always complain about this. During my startup, Barclays shut down our bank account because we received money from Ethereum.
Did they actually?
Oh, I was so angry. But the thing is that, so they shut us down. It's not because they don't like us, but because of the regulatory burden that they have, from the governments and everything else is sort of, us as a client, we weren't going to make them enough money in order to be worthwhile for them to deal with the compliance. And so they just shut you down. They just expect you to move your funds elsewhere. And for me, that was so frustrating because you're a startup. The last thing you want to think about is someone rug pulling your bank account. So you just keep it in crypto and you pay people using crypto. And then you get a bank account where, you talk to the bank first before you open it so they don't shut you down unexpectedly. But normally people who go through that experience start to realize, cryptocurrency is really useful. You're not doing anything Art was a software startup. It was the most boring thing ever. Not controversial in any manner. Completely legitimate infrastructure company. And, if you don't have a bank account, well, you can't have a business. So, cryptocurrencies help with that. And then for me, that was the point for me when I realized, this is really useful. I mean, academically, it was just really interesting. But now it's I benefit from this.
Yeah. I mean, you could never really relate unless you actually go through everything yourself, like how tricky, how difficult it is to trust the process, trust the system and everything. Would you say Bitcoin or like cryptocurrency would be the main payment in maybe, I'd say like 30 years or even 10 years? I don't know.
So payment wise, it depends, I guess. What's the best way to describe it? So for Bitcoin, for me, at present, is really useful for high net worth individuals who just want to, hold an asset where they don't lose their savings. My biggest fear at the moment is that, I guess one way to phrase it up, let's talk about the Lightning Network first. So the Lightning Network's really exciting because you can transfer value to anyone in the world. And, it's off chain, it's effectively free, it's low cost, it's instant, it's trustless. It's amazing for sending value. Mm-hmm. But at the end of the day, for me, I always categorize it as a routing network. It's really good at routing value, but it's not very good for merchant payments. And so what tends to happen is a lot of users end up on custodial wallets. So you install a Lightning wallet, you top up your sats, and now you're on a custodial wallet where this counterparty holds your funds. But when they transfer the money, they use Lightning, because it's rapid for them, it's fast, there's no Bitcoin fees. So you're still benefiting from Lightning, which is this peer-to-peer decentralized network. As in you could join Lightning as a node, you lock up cash and you facilitate routing on the network. But my fear with Bitcoin right now is that it's custodial wallets. I don't want people using custodial wallets because then you just bring back the old banking system. So for me, that's why the rollups are exciting, because I see the rollups as solving the custodial, I can still lock my funds into this wallet, but I don't trust them with my money. And then they can use Lightning in the background to transfer the other people in the world, like rapidly. So combined, they're both complementary. But right now, the community's split. They see one of the other. And actually, they both work perfectly together. So in terms of this, going back to the original question about payments, I think at some point it will be used as a medium of exchange. I don't know if you're going to buy like your milk with it. It doesn't seem like a very good use case for Bitcoin. But if you're transferring money across the world, then yeah. I mean, I don't know if you ever had to deal with international transfers. It's the most legacy slow system.
And they charge the agency fee, like transaction fee as well, depending on how like the amount of money you're like transferring.
Yep, and the number of hops is so exploitive. Like we have money, I had money sent from Hong Kong, and that someone put in the wrong IBAN code and it was stuck for 3 months.
Oh my god! Yeah.
Crypto solves that. Bitcoin fixes this. That's the meme, but it actually does fix that very well.
I think the system would probably break if everyone on this planet Earth is using, let's say, it's like transferring money at the same point. I think it would probably break, and it would have more like underlying issues if everyone does.
Well, for cryptocurrencies. Yeah. So, I mean, this is like the blockchain scalability coming out again. If you're only going to use Bitcoin or Ethereum in the base network, then yeah, it's going to be too expensive. Every time like there's an NFT drop on Ethereum, the fees skyrocket from like 10 Gwei to 1,000 Gwei, which pretty much means it goes from like $1 to like $500 for a transaction. It just can't scale. But like what's really cool about stuff like the Lightning Network is that that's truly peer-to-peer. It's basically this really cool mesh network of nodes. We all lock in funds, and then you just find one route on the network that can facilitate your transfer, and then you send it. But the only peers involved are the peers on the route. So you have like Alice, Bob, Carlin, and Dave. If they can facilitate the transfer that direction, it's only those 4 parties involved. And so if you have a network of 10,000, 100,000 nodes, and even if you have like 1 billion people, they're all picking different routes in the network. And it's only, between those 4 people. So it's very, like efficient in terms of scaling.
Yeah, and it's got like that privacy, like intimacy between people who are involved, which is, so you can make the direct transaction between 2 parties.
You can also do it like in a trustless fashion. So with Lightning, if I send you money, what you do is first you give me like an invoice. There's a condition on the invoice. So I send you the coins with that condition attached, and then you will basically, once you receive the payment, your wallet will pretty much say, okay, you've satisfied the condition, and then the payment completes. But if I send it to the wrong person, then they can't satisfy that condition. So, the payment gets stuck, but then it expires after like, 10 minutes, 20 minutes or something. So it was really cool though, because my problem is my payment got stuck for 4 months from Hong Kong. Here would be like expiring like 20 minutes.
Yeah.
This is so much better.
It is so much more efficient as well.
Yeah. But like the reason they like Bitcoin is because I think it's, I want to say 30%, but I don't know the exact percentage. You know, most of their GDP is made up of remittance. There's people in like, you know, there's El Salvadorians in the US sending money back to their family. But transfer, I don't know, what's the company called? It's not TransferWise. It's, I know brick and mortar company. Anyway, they tend to take a big chunk of the remittance. And so the El Salvadorian government was like, well, why don't we use Bitcoin? We just remove these middlemen, and then people can actually get more of the remittance, and that's better for their economy. So that's sort of what got them into Bitcoin, just to solve the remittance issue.
Yeah, it's like no agency fee.
Yeah, exactly.
Yeah.
So it's like there may be a tiny fee associated, but the fees, like pennies. It's not even pennies, to be honest. It's so small.
Thanks so much for sharing with us. And guys, please do follow Patrick on Twitter, LinkedIn, any social media, and do subscribe to our channel, comment down below, and like, please. Thank you.